what the crazy thing to me is like all the stuff in the news that you just mentioned. Like obviously, like I go home and I see relatives and I'm like, oh my god, like you live in New York. Like people on the outside that don't live here think that probably everyone that lives here is crazy, and it's just nuts because everyone continues to invest.
All right, welcome back. We're here at the Real Estate Roundtable with IPRG. It was a little bit of a break there, but we're back into it. It's August of 2026, and I'm joined with Adam Lobel.
Hello, Derek.
Welcome, Adam.
Hey.
Luke Sproviero.
How you doing?
We need the nicknames for you guys.
Yeah.
But anyway, this is Derek Bestreich, and we're here to talk about what we're seeing in the real estate market in New York City at this time in the summer of 2026. So, how you guys doing?
Doing well. Trying to keep busy and find the product that people are buying because, as I'm sure you're going to get into, there's things that a lot of people are looking to buy, and there's things that not a lot of people are looking to buy.
Yeah.
But yeah, that's how it was going.
How's the summer going?
Summer's going well.
Yeah.
Trying to stay out of the city as much as I can.
Oh, yeah?
Yep.
That's good.
It's not the best place to be in the hot summer.
Yeah.
There's elsewhere that's nicer.
Hot. And a lot of people get out of town on the weekends. So it's
very true.
Kind of strange in the summer of the city.
For sure.
Adam, how about yourself? How you doing?
Good. Things are good. I mean, we had been having a really good summer. Heading down to St. Louis tonight to see my dad's 75th birthday, celebrate it with my family, and summer's been good. It's been relatively active, and we're staying busy. So.
And yeah, I know you wanted to touch on this. We'll touch on it briefly, but the sales have been pretty strong. Activity's been strong.
Yes.
We closed out a lot of properties in the first half of the year.
Yes.
Great looking pipeline going into the second half of the year. So I guess that's a little bit of what we want to talk about here. Not too detailed on our activity or the sales in general, but kind of high level. It feels like New York is a little bit of a tale of two cities when it comes to real estate, because on one hand, there's so many things that are going so well, I guess, in terms of values and ownership side of the business, and just the market is performing very, very strongly on some levels. And on the other hand, you see a lot of distress and a lot of problems and a lot of serious concerns that people have throughout the market. So just want to kind of weigh these two sides of the real estate market that we have in New York at this point. I'm happy to lead in with a little bit more if you guys would like.
I mean, I can jump off a little bit. I mean, I if we're talking about different types of asset classes that are selling, it does feel weird because there are certain types of investment assets like development or free market buildings that are selling for, in my opinion, all-time highs, right? Like development throughout where we focus in Brooklyn definitely are at all-time highs. The Manhattan, Adam can touch on, but what we're seeing is very, very strong sales. So those are people that are building multifamily. A lot of these guys, if the price is right, they're building rentals, and if they can build like a 99 unit, they're definitely building rentals. And then you have these condo developers who are paying astronomical numbers for these land sites, and they're doing that because they feel like they're gonna be selling these condos in a very hot residential market. So that's why they're paying that price. There's no other reason there's no other reason why they would be. So that's interesting.
Mm-hmm. Yeah.
And then obviously the townhouse conversion deals that we sell a lot of, that's a big part of our business. Those are very easy to sell. There's tons of buyers for that. So again, that's exit to homeowners. And then you can obviously see all the condo sales and the finished townhouse sales, and those are ridiculously high. Every day it's another sale for a number that we can't believe.
It's true.
And then obviously the rent stabilized, and the buildings that have some free market, some rent stabilized, these buildings are really down in value. So it's really a tale between those different asset classes.
Okay, good. Yeah, you covered a lot of stuff there.
Yeah.
But yeah, it's true. So just to get into it a little bit more, I mean, on the valuation side, when you say these free market buildings are selling for all-time highs, I mean, that's really been a function of the rental market.
Yeah.
Which,
Well, there's one thing holding them back, which is holding everyone back. Interest rates. I mean, they would be going for even stupider prices if interest rates were relatively low. Like, they're obviously higher. So that's the only negative thing for these asset classes. But go on.
No, well, that I don't think that's true, because if you're seeing all-time highs across free market, mixed use, development, end user.
Yeah, you're right.
How can you say that interest rates are holding them back? Now I hear you. Obviously, fundamentally, because if they were 3.5% or whatever they were a few years ago, we'd be looking at a completely different ballgame. But the truth is, we have a higher interest rate environment than we've seen.
So
right?
to answer your question,
Treasuries are at the highest point they've been at in 20 years.
100%. So it's not affecting development, because you're right. Those are the highest. The price per buildable is the highest it's ever been. So. Well, when interest rates were lower, they were lower.
Well, you're also talking about specific to Brooklyn-based development sites and condo-esque type of locations, right? Like, I wouldn't say that the price per buildable square foot in Manhattan's at an all-time high. It's actually down from all-time highs because the cost of development is a lot higher, and the way that they've structured all the tax incentive for developers aren't as strong for condo development. So, like, pricing in Brooklyn and, call it Williamsburg or Greenpoint or even like core Western Brooklyn neighborhoods are selling for higher price per buildable square foots than 95% of the Manhattan market in terms of development.
But on the grade A Manhattan stuff, you see crazy prices.
Yeah, for sure.
Where someone can sell a condo like in the Upper East Side or whatever, Tribeca, like those prices are crazy.
Yeah, but still the price per buildable is around like $400 per buildable square foot, and then you're seeing over in Manhattan, yeah, and then you're seeing over $600 per square, per buildable square foot in good Brooklyn locations, because you're not a lot of it. You're not competing with the elevator amenity type of properties.
There's just a comp this week in Brooklyn for a site on Union Street right off of Grand Army, and I think that sold for $650 a foot.
That's a big number, though, because
$650,
we all know what Union is. I mean, there's a lot of traffic that backs up there.
Yeah.
It's not the place I'd probably do that, but it's a big number. It's a big
close to
number.
Prospect Park.
Yeah, on a map, it's very good.
On a map, it's good.
But to answer what you were saying, Derek, the interest rates, right? So you're right. It's for the development, it's definitely not affecting it, and for the home ownerships, I think these people, maybe they're not getting a lot of financing. It's not affecting it because the prices for the homes and the prices for development is higher than it was when interest rates were low. In these prime Brooklyn markets, okay?
Mm-hmm.
Now, where I'm saying it's affecting it, on the renovated free market stuff, it's free market, it's great, but people need higher going-in cap rates because of where rates are. Where if rates on that stuff were 3.5, they're not going to be like, they won't be trying to get so close to a 7 cap or a 6.5 cap.
Yeah.
So that would come down.
All right, I hear what you're saying. You're saying the finished product.
Yes.
Although going for great prices all in all,
yes,
and the rental market doing great, you're saying the value is suffering because buyers are trying to get a cash-on-cash return.
They have to.
Which factors in their cost of capital at like a 6.5% rate of interest rate is really holding back the price.
Yeah, like that multifamily that we have a ton of activity on in Park Slope, for example, where everyone's trying to get as close to a 7 cap as they can because they don't want the negative leverage. Mm-hmm. That would be different if rates were lower. Like that, so there's still a ton of momentum. People want to buy it because it's the best product to buy, but they can't just pay these like historic prices where if rates are, call it 6.8%.
Yeah, I mean the big trend over the last, call it 2 years, has been finding the obscure international buyer to come in, and they have different tax benefits like accelerated depreciation, and you have a ton of money coming from Japan. Numerous brokers are representing these buyers, and they're bringing through different family offices into Manhattan in particular, and exiting every single syndication deal.
Those are the exits. Yeah,
those are the exits because those people pay a 5.5 to 6 cap, where the rest of the market is probably a full basis point higher on that type of stuff.
So these guys are paying 5.5 to 6 caps. You're saying these foreign investors because they have these overseas benefits.
I mean, everyone's trying to get them to pay less than a 6, but they're getting it on deals like a 5.5% rate that I've seen.
Yeah, it has to be squeaky clean. Has to be perfect paperwork. Has to be like very, very good, clean, renovated, cash flowing assets with small amount of retail on them, and they're the buyers for it.
Yeah.
So is that the best asset in the market at this point? These clean, renovated, cash flowing
in
properties, or are they suffering like what Luke was basically saying based on the interest rate?
So I think they're not suffering. They're performing very well. Rents are very high. They're free market. They're easy. Where they're suffering, it's hard to exit properties right now, right? Like Adam just touched on. everyone knows like the Japanese funds, and if you have someone in 1031, like you'll hit a nice price if you can get them to buy your product or your property. But to the normal buyer, like I said, they're not looking to have negative leverage, so their cap rates are affected. Mm-hmm. So it's hard to exit. Like, so if someone buys it's really hard to make money and exit right now. If you had the cost to buy the building and you renovated the building, then you have to make your fees and your waterfall and like all your stuff.
What are these Japanese buyers borrowing for in Japan?
I don't know. I think my guess, like for what they're paying in New York, they're probably borrowing around 2.5.
Well, I was gonna say 2.5 to 3.5.
But that's a guess.
Well, you're also seeing like I don't know so much about this, but from what I'm reading, like the yen is actually like collapsing right now, and the U.S. dollar is actually getting much stronger against the yen. So I do think there's going to be an additional influx of specific Japanese investors to the New York City market, and I think that trend of renovated multifamily and good locations is going to continue because last year they weren't looking to buy in Brooklyn, but now they are. So you're starting to see them, to target the best locations in Brooklyn, the western neighborhoods.
What about the locations that are a little less than the best?
I'm not sure that those international buyers are going to be buying in there.
No,
in the short term.
I mean, you had Carlisle buying out there, but they're obviously not really buying that much anymore. So no, these funds that we've seen, 99% of people that are in a 1031 or overseas fund, they're targeting really good locations.
We've showed them properties where it is perfect on paper, checked every single box, and then when they came to look at it, there was some graffiti on the adjacent property, or there's a homeless person sleeping on the street. They didn't buy it because of that. Yeah. So I think the tertiary markets it's going to take a little bit of time for them to see that benefit with the influx of foreign capital coming in. But I do think the core locations are going to benefit moving forward with exits for the professional investors.
Yeah, the exits are out there. You said that you have to get lucky and find the right buyer. But you see it. Any exit that's big, that someone says, oh, that's a nice exit, it's to like a Japanese fund, or it's a 1031 buyer.
Yeah.
It's someone, and you have to get lucky at the 1031. They're seeing a lot of stuff.
And the 1031 buyers came because of a Japanese buyer?
That's nothing. All the 1031 buyers are in 1031s because they exited probably to them. Yeah, it's a lot.
We just sold 2 properties for $25 million to 2 guys that were in a 1031 from Japanese buyers, right?
This is all true, yeah.
That was good.
Yep.
All right, cool.
Very true.
And how long was that guy trying to sell the building for?
Years.
Years.
Yeah, yeah.
Years.
Yeah.
And then what was the deal story on it?
No, it's just right place, right time. We had 1031 buyer.
But that's the case for any comp you see right now that's above market. It's a 1031 buyer, and they're gonna buy the right product, right? Like and someone like I was looking at the comps the other day. Someone sold a retail condo in the city, and they bought a 2/1 in prime Brooklyn. They paid a big number for it, but it's core, great tenant, good building. So like they're gonna flock to that stuff. Like that's why right now A locations is the win. So
like on X and online in the real estate circles, like you hear so many people just complaining so much about the socialism and the rent freeze and the office to protect tenants, and like people that aren't here in New York, it seems like it's just nothing but doom and gloom, kind of in terms of like the business news, right?
100%.
But on the ground, we're seeing families continue to buy houses for very high prices. Office leasing is up 25%. I think the rents are up 25% year over year. Mm-hmm. Rents are up at least 5% year over year. We have all these people continuing to buy into New York. So like, what's the thinking behind all that? Like people still love to be in New York. Even this Mamdani thing, it's not new at this point. The primary was over a year ago.
No, it's the only thing it's really affecting. Obviously, he's targeting landlords, so that's not been great. But the stuff that he's targeting, the rent stabilized stuff, that's really what they're going after, right? They're looking to own these properties. That's what I think.
But why are people paying so much or continuing to buy in New York? Like you said to me yesterday, we were talking about like these free market mixed use buildings that are extremely in demand, and you think people are overpaying for them.
I do.
But basically, you're like, people just can't get enough of this product type, and people can't stop themselves from continuing to buy these assets. So why?
there's a story, obviously, like New York is always going to be good, and this is a good time to buy, and it's only going to get better. And these small free market buildings, like you have extreme rent growth, they're free market. Like there's a story there. But what the crazy thing to me is, like all the stuff in the news that you just mentioned, like obviously, like I go home and I see relatives and they're like, oh my God, like you live in New York. Like people on the outside that don't live here think that probably everyone that lives here is crazy. And it's just nuts because everyone continues to invest. Like people are buying condos, they're buying these mixed-use buildings, they're buying free market buildings, they're building development sites, they're doing all this stuff. And outside looking in,
it's booming in a lot of ways.
No, it's booming. It's ridiculous. There's a lot of negative things going on.
Of course, there's a lot of negative news.
And the negative buildings, like the rent stabilized buildings, they're getting hit harder. I mean, we just sold a 20 unit in a prime location for $1.3 million.
A 20 unit building, yeah.
Yeah, that's insane. Like if you bought a 2/1 in a good location for 1.3, you stole it. A 2/1.
Yeah.
And this is a 20 unit building. So
I mean, dude, if you bought a piece of land, a 1 family, a 2 family, a 2/1, any small piece of real estate on like a 25-foot lot or less.
Yeah. Oh.
I mean, what can you buy for 1.3 in New York at this point? But here we sold a 50-footer.
Yep.
With 20 units.
Yep.
I mean, you can't even buy a 2-bedroom in Hoboken for $1.3 million.
Yeah.
Like,
can you buy a 1-bedroom?
You can definitely buy a nice 1-bedroom.
So
Probably.
it's equivalent to a 1-bedroom in Jersey.
So would you rather own 20 rent stabilized apartments in Park Slope?
Well, it depends what your business plan is there.
Yeah. Listen, the whole thing, the rent stabilized stuff is getting hit so hard, and it's only going to get worse. And I think we could see like the motivation in making it so worse for these people that are in power. And it's crazy. It's two sides, and these people are getting hurt, and that's where you don't have the buyers, right? There's not people jumping in to buy these rent stabilized buildings unless there's a real story.
I disagree.
And people are buying them, so you're right.
I think it's not an issue of the buyers. I think buyers will buy these properties and want to buy these properties and like the idea of the basis for the long term.
Yeah.
I think it's that you don't have sellers willing to sell at basically where buyers expect to be buying these properties, or you have banks that aren't willing to do a short sale because it may not even be the operator's decision at this point. Like, we just saw that property that sold in Brooklyn where the guy paid $9.2 million for it and he borrowed $5.5 million at acquisition. So this is like 7 years ago. He paid $9.2 million, borrowed $5.5 million, and it just hit the comps at $4.5 million. So that guy, the operator's equity got wiped out.
For sure. And
the bank sold it at a short sale. And now you have fresh capital coming in, a new buyer coming in, gets a reset basis at a price that makes sense to him.
Yeah, you make a good point. You have to have the sellers willing to sell at those prices, and people are, right. Like you see a lot of these big families. Like when I started as a broker, we used to call these people all the time, and they didn't sell, and and now they're selling, and it's like.
Well, at the time you could have sold it for a 4.5 cap, and now it's like a 10 cap, and the values have been depressed like 60-70% on some of those buildings.
The thing that I think is interesting that we're starting to see for the first time is these forced sales.
Yeah.
Or short sales, because for years it was like a whole like extend and pretend thing, right? Mm-hmm. Like the loan would come due, the borrower, the owner would go to the bank and say, hey, it doesn't cover for DSCR, or the bank wants like a pay down. The guy's like, I don't have money to pay it down, so they just modify, they extend, and everything keeps kind of moving, right? And the guy keeps making the mortgage payments, or they come up with some kind of workout, maybe interest only, some adjustment. But it seems like now we're starting to see these deals actually hit where the bank knows the asset is worth less than the loan amount, and they want to get their money back, and they don't want to continue to do this whole extend and pretend thing, assuming that they're even getting their debt serviced.
Yeah.
So you're starting to see, I think, we have one going on in the office right now that I was talking with Jared about yesterday, where it's basically, he was hired by the seller, but this is the bank is the one, they're losing money on the loan balance. So he's negotiating his fee with the bank. It basically turns from dealing with the borrower to dealing with the lender, but regardless, the deal is happening.
Yeah, but you see a lot of sales too, like not a lot, but you're seeing sales on these big RS buildings where it's the seller selling. They're selling, they have tons of equity even at these prices, and they're selling just to sell. There was that big package in the Bronx where he sold his entire portfolio, and these were like...
Who was that?
I forgot the guy's name. I'm not going to say his name anyway. But there were big elevator buildings in the Bronx, and they're all sold. There was like 5 in a row that sold, and he was selling deals for 60 a door, 40 a door, 50 a door. Like, these are insane prices. And he
had equity in there?
Oh, yeah. He barely had mortgages. So,
yeah.
But like, the guy could have sold for way, way more, like years ago. So it's like he now comes out of the woodwork to sell. And there are people like this.
Yeah, I mean,
they have to sell. They're probably selling for real reasons. Like he's probably retiring. There's real reasons to sell real estate. It's not always about what is my exit.
Or he doesn't want to deal with the tenants going through and one and all the violations and all the headaches.
Yeah, I mean, one of the other things I'm starting to see is like after the 19 laws, like they obviously clamped down on any upside in the rent stabilized apartments. So you see all these landlords just like not renting them out and having vacant apartments. And more and more and more as the years go on, they just start accumulating more vacant apartments in the building. And recently we've been looking at a lot of like hybrid type of properties where there's 5 to 7 or 8 vacant apartments in a 20 or 30 unit building, and the landlord's cash flow is decreasing. It's barely covering at this point. And he's like, well, what do? I can't rent them out because I'm losing money on the rental. And, and he's really asking for the advice on like what to do. And it's like, I don't know, you could rent to a friend or a friendly and hope for better days, or you just got to leave it vacant. And it's really a shame what has happened to those types of people.
Those people don't know what to do with these apartment buildings. I was in a 20 unit 2 weeks ago. I think 13 are vacant. The guy wants to get the rest vacant. He thinks there's like a condo conversion opportunity. But we went through the whole condo conversion play, and like the condo sell-out prices for a multifamily walk-up building aren't great. It's going to cost a ton of money to get there. Once you discount in like the expected return for the developer, the cost of construction, the amount of time it's going to take, and your sellout values, the price of the property wasn't great. Meanwhile, it's a 20 unit, so I think his tax bill on it's like $100 grand a year, and he has to keep feeding the taxes, the insurance, the water. He's not collecting rent.
Yeah. Well, and who's going to say the Attorney General is going to approve these condo tax lot subdivision permits in the future to redact out rent stabilized units to convert to condos? Good point. So like, there's obviously inherent risk in doing that today because it's not like a sure bulletproof type of thing. Yeah. Because if you're taking a 20 unit, turning into 6 apartments, going floor throughs, making them 3 or 4 bedrooms, trying to sell, I don't know where the location is, but call it $1,500 to $2,000 a foot plus, depending on the location.
This was like not that kind of location. This was like mid to South Brooklyn, where the high water mark for comps is $1,000 a foot.
Yeah.
But I don't think you can get $1,000 a foot for a tenement building converted to condos. So
you got to buy the building vacant at $300 a foot to make any money on that. And there's a lot of inherent risk in doing it, and it costs a lot of money.
A lot of money.
Yeah, and who's to say in 2 years when you finish the project that Albany hasn't struck down or some additional law to disable the ability to do that at this point?
It makes sense. Why wouldn't they?
Why would they? They're getting rid of sub-rehab. You can't renovate it.
Anything, to be clear, anytime you're deregulating apartments or taking rent stabilized units and trying to make them free market, they are going to just not answer or reject. They're just going to do it. You see the Spitzer lawsuits, the sub-rehab lawsuits. Like, if you're attempting to do that, no matter what fashion you're trying to do it in, it's going to be delay, or just no. Or change rule.
They've delayed Spitzer for 2 years on what seems to be a pretty clear-cut law.
Very clear. It's very clear.
It's got one tenant holding up this entire development.
Yeah. Yeah.
And DHR is not ruling on it.
No. They're just taking their time. Like,
so those
change the law.
How many millions of dollars are just sitting around waiting because there's this one tenant that DHR doesn't want to tell them they have to vacate.
Well, he also doesn't. They don't want someone to take an entire building and make it market rate condos.
Yeah.
Like, there's a lot of. Anytime you're doing that, they don't want to do it. So you got to be mindful of that. And they've proven to just change the rules.
They have changed the rules based on like backdoor, closed door meetings, apparently, based on that affidavit from the former
Woody.
Yeah, Woody Pascal, the commissioner, or whatever his title was.
Yeah.
Backroom dealings, changing laws without any public debate or knowledge, and then boom, there you go. Here's how things work now.
I mean, I feel awful for the people that bought in 19 and 18 and just basically got their entire equity wiped out. Rates changed, laws changed. Those people just lost everything.
Yeah,
but now what you're seeing is like all of those forced sales, or a lot of them, because the 5-year debt cycles, like a lot of that's behind us at this point, right? A lot of it, not all of it, but a lot of it.
Well, a lot of it, I think, was on extend and pretend.
Yeah, well, now that's why you're also still seeing it circulate a little bit.
You're starting to see it.
But you saw a lot of foreclosures and bankruptcies last year and the last 2 years. Like it's it's gut wrenching for people.
It is
in this industry. Now, the normal person working in tech and finance and marketing and being a nurse, like they're not privy to all this stuff because they're living in a different world than what we're seeing.
Yeah.
And it's abysmal what they've done to some of these landlords. Yeah.
You mentioned there's two sides to all this. We talked about obviously the assets that are selling that everyone's gravitating towards. Obviously, you see the comps and Pincus and Traded and all of it. It's all development and it's a lot of the same stuff. So we're seeing that, and obviously everyone that's in the business understands what's going on with rent stabilized and all that. But I think what we need to be aware of, what's going on with Mondami and the politics here. He's obviously, the whole administration's against landlords, and I think if from the outside looking in, he's doing really, really well. Like people that maybe aren't landlords, they like him.
Of course.
He's got the Knicks one, like all this stuff's like going his direction. Like nothing bad has happened yet. Like he's doing well, and meanwhile he's just targeting landlords, and that's getting way worse. And I think people need to realize. They need to wake up and think, okay, this guy's actually doing really well, and he's going to be perceived to be doing well. So how much worse is it going to get for landlords? Like if he does well and gets reelected, or someone else comes in, like there's things that he is doing.
I mean, these people have studied Marxism and socialism, and
it's scary.
Like there's that video that they just posted of Sia Weaver. This whole like United Pinnacle Tenants film. It was a film, like a well-made film. It was 15 minutes long. And the first scene is her sitting there reading a book called The Great Rent Wars, and then it shows like this list of books on this coffee table next to her. And if you zoom in on them, it's all just a bunch of like socialism, rent strike.
But this is my issue. Like,
but they're implementing all these old ideas.
They're implementing everything. They're coming out with all this good content, these videos.
Yeah. Mm-hmm.
Like they are attacking, right? They're fighting very well. It's coming across. They're winning. It's working, right? We're like the landlords. Like we get invited to these events, like pay $5,000 and play golf, right? And we're like, oh, should we do it? Like there's gonna be so and so there, and let's do it. But like, it's not about. No one's doing these events to talk about like the fight, like how are we going to overcome this? How are we gonna like get somebody in that's changing things? What's the fight gonna be? It's never anything about that, and everything they're doing is hitting on all angles, and it's working. Like even think about this. Even these free supermarkets, right? Where obviously anyone that knows business or knows numbers is like, how's this going to work? Like free food, like someone's paying for it, it's going to be disgusting. You already hear stories, people like going in there, getting free food, and like flipping the food and selling it for a profit. But if you think about the business angle of it, right? Like let's say that he opens 10 of these, right? And they lose $20 million a year. That's $200 million in deficit, right? That's literally nothing for New York. So all of a sudden, he knows it's going to fail. He's going to keep it He's going to keep it. People working in there. He's going to keep the food coming. Everyone's going to love it. He's going to take the $200 million hit a year, which is absolutely nothing. And all of a sudden,
he gets to market it.
The socialist movement is working. Everyone's like, it's working, because he's taking a hit, a $200 million hit for 10 of these. That it doesn't even move the needle.
Well, the reality is the tenants that are supporting these initiatives, they don't realize the ramifications to everyone else in the market that. Everyone else's rents are higher because of some of these initiatives.
I know, but think about that business move. Think about that business move he just did.
I get it.
If that supermarket thing, he knows it's not going to work, but it's a business move. He's like, $200 million loss for 10 of these. I get all of a sudden every other state's going to be, look at this. Why does New York have these free grocery stores? But it's all, there's a lot of these plays happening. What is the real estate industry doing to combat anything?
Well, I think what's frustrating.
That's what's frustrating.
I think what's really frustrating working in real estate is like we all agree, there's all these vacant apartments and you can't raise the rent, and there's a rent freeze, and the taxes and the utilities and the interest rates, and the buildings are worth nothing, and like you go on X and it's an echo chamber of like the same ideas over and over and over. But you're right, nothing is actually happening.
Nothing gets done.
But no, dude, it basically just says to me that like.
And at the real estate events,
it's not a fight anymore, right? Like the fight is over.
What happens at the real estate events? We have the sushi, we have the drinks. You pay all that money, and then nothing gets done. You just go home.
No, nothing gets done. I mean, that's basically just you go to schmooze and have fun, get the drinks and the sushi.
Yeah. Play the golf.
Yeah, you can play golf,
but like nothing's being organized.
And it's not going to be.
And the funds that are being raised, these things aren't going back into anything.
It's not going to be
for the real estate industry.
It's not going to happen. You better. I think you better hunker down.
Yeah.
Get patient. If you want to own these apartment buildings, you better be what they call like an above board or high water, whatever the term is, high something landlord.
Yeah.
And just be a good operator.
Keep the violations
hopefully,
off.
yeah, keep the violations off if you can.
Yep.
And let them ride and hope that in 10 or 20 years these laws change or there's something that loosens up. I know everyone's been talking about the vacancy increase for forever.
Yeah, but again, that's
I think you'll get it,
Yeah.
but it's not going to be what you think. It's not going to be like a market reset like there is in California. It's probably going to be like you can get like, I don't know.
You're still increasing
Some
rent
percent.
substantially. They're not going to just sign off on that. Anytime you're increasing rents on below market apartments, that's what they're
You
going to
know,
do.
another thing, like how the real estate industry has been beating this drum. All these vacant apartments. You want to like bring down rents and affordability, like add to the supply. Like we're here, we're waiting for you.
Yeah.
They know.
Yeah.
No shit. Like it's so obvious. They know.
Yeah.
They don't want to allow it to happen.
No.
Well, I mean, the city easily could restructure
They
the
probably-
incentives for
They don't want
development.
it.
They probably would prefer that the buildings sit vacant and you have to just feed the taxes, feed the meter.
Yep.
And now you're going to have this whole rental ripoff hearing and you have these rent impairing violations, new violations where the tenants don't have to pay rent. They're trying to organize these tenant unions,
Yeah.
right? Like that's what this whole video that it just came out with was about, is organizing tenant unions, because I got this email from the Office of Mass Engagement from the mayor's office, and it shows the video. It looks really good. It like kind of gets you excited, even though I don't agree with anything in it. It like still kind of gets you excited.
Yeah, of course.
It's got like this guy's voice. He narrates it. It's
Yeah.
like really beautifully done.
Yeah.
And then there's other links, and you click it. It says talk to tenants.
Yeah.
And I think the tenants are these tenant unions, and there's like all these events that I'm gonna end up going to one just to see what it's all about. But there's one in Grand Army. There's one in Flatbush. There's one in Harlem. There's one in they're all over the place. And basically you go and I don't know what happens there, but you talk to tenants, and they probably preach the Marxism and the socialism.
I mean,
and get everyone all
they're
riled up.
organizing. You mean?
But
right?
yeah, they're organizing for tenants to not pay rent. So meanwhile, the landlords are sitting on these vacant units, not collecting rent, and now you're going to start dealing with your occupied units not paying rent.
Yeah.
Well,
And
Yeah,
And
where-
meanwhile,
where's that gonna lead to the building?
Meanwhile, those landlords are going to these events, having the sush, being like, "Oh, this sucks," and
you're
not going to do anything about it.
I mean, you're seeing more and more and more rent overcharge
Yeah.
cases. I mean, recently we saw one on a rent stabilized tenant, which that was like basically a first for us. Like a rent stabilized tenant claiming they're being overcharged, and they have a pretty clear DHCR history of not being overcharged. Like the landlord's going to win that case. But it's interesting. Like for the most part, like most all these tenant protection units, and they're starting to have a real impact
you're
on
going to see
pricing.
more
Yeah.
bankruptcies
For sure.
being filed.
Definitely.
And the mayor's office already tried to get these community groups to purchase the Pinnacle portfolio. That didn't end up happening.
But they still tried.
They negotiated with Summit for a bunch of millions for repairs. But when it happens in the future on a smaller scale,
Yeah.
they're definitely going to get their community organizations to purchase these properties. You'll have these tenant-run type of buildings. I think they'll just wipe out the taxes, so like these groups don't have to pay real estate taxes. They'll pay for the insurance and the water and the heat, but they'll have a completely different operating structure than what like the regular, property owners have to deal
Yeah.
with. So, yeah, I mean it's like as bad as it can get in
that
terms
stuff.
of multi-housing, and even the stuff with these individual apartment improvements, these
Yeah.
quote unquote free market apartments in a rent stabilized building. Man, that stuff has become super tough, and it's really unfortunate. These are beautiful apartments that were renovated 15 years ago, 10 years
But
ago.
remember, the city said, "Oh, you don't need to keep your records past 4 years. Throw them out. Do whatever."
No, of course.
And now, obviously,
That
what are they
go-
doing?
That goes without saying. Everybody knows that.
Yeah, but now what are they doing?
No,
No-
now they changed the law,
Yeah,
right?
or they
Now
changed it.
there's no 4-year look back.
So now no one has this paperwork.
Well,
You
as a
didn't-
landlord,
you didn't
like
have to.
You didn't have to.
like
It was
why would
But
you
you know what
keep
you
it? You don't-
did. But you know what you did have to do is you had to demonstrate how much you spent in order to take the increase.
Yeah.
Because that was the deal.
Yeah.
You spend a certain amount, you get a certain amount of increase. Now, in 2026, we go to market these buildings for sale, and we say, "Hey, client, where are the checks? Show us what you spent." Oh, I don't have them.
Yeah.
Okay, great. So we're
Yeah.
marketing this building with these $5,000 rents, but
Yeah.
like, how did we get to 5,000?
Yeah.
Where's the proof?
Yeah.
Well, you're not even buying the bricks anymore. You're buying paperwork.
Yeah.
And
Especially in
for,
Manhattan.
for most of the owners, they don't have it.
It's true.
And even if you bought what you thought was a free market building and the bank thought it was free market and, all the tenants think it's free market, well, guess what? if there's a problem with the tenant, or they go to one of these meetups and realize that you can make a claim and the landlord doesn't have perfect paperwork on it, like the landlord's in trouble. And there's no ramifications to the tenants that are claiming these rent overcharges.
For sure. And then they can get a major payday.
They get a payday. The landlord actually has to step up, start spending legal fees.
They have an incentive to file the overcharge. I don't even think these tenants know about that, but they will as the New York City's mayor's office continues to blast out all this like pro-tenant, talk to tenants, unionized type of propaganda. These tenants will know, and then these tenants will all be unjustly enriched at the cost of the landlord and the real estate market as these properties fall into bankruptcy.
It's all true.
So you want to leave it there or you want to keep going?
No, I mean, obviously I don't want to make it so doom and gloom, but like I think the reason why this is important, as discussed, is there's just really two sides to this.
Yeah.
And there's still obviously a huge part of the investment cycle that's really good.
Well, I mean,
right?
talk about the rising of the ashes. Like, I mean, office buildings, and you mentioned this earlier. Like, the office asset type is doing phenomenal right now.
They also took a lot. They took some supply off the table.
For sure.
I was with I saw Ruby Schroen in our building. He's obviously a big office building landlord. He's the landlord of our building. And he said to me that all this office to resi conversion and this office space that's been removed from the market has been phenomenal for office leasing.
COVID, the office market got rocked the hardest. Things were trading for like $300 a foot in Manhattan. Rents were going from like $70, $80 a foot down to $30 or $20. And now it's back at historical highs because of what you just mentioned. And that asset type in particular is continuing to perform excellent. Back. And also the work from home. Like, my buddy works at Google. Like, it's a tech company. Like, he should be able to work from home, but they're making him come to the office now so that there's camaraderie and so you can build a company.
There's been a bunch of big leases that have hit the wire. Anthropic, Snap, I saw this week.
But this all goes back to the whole Mondami thing and how it's working. Like, think about this. Everything else, people are still wanting to work here, live here, pay here,
buy here,
do whatever. So, like, where is it negative? Like, why as a landlord, why do we think this is going to go horribly and this is only going to be a 4-year thing? This could be an 8-year thing just with that guy.
Just with that guy. It's going to be much longer than 8 years at this point, and it's going to take a while. Like, the capitalists that say this is destined to fail. It's going to take a while to work its way through, and for people to see the effects of that. But let's leave it here. I think we covered a ton of stuff.
Yep.
We got to save some of our fodder for future episodes so we don't fizzle out on this again like we have in the past. But we'll keep it going. Might be some similar content in the future. All right. We'll leave it there. Thanks. Bye.
Are you there?